Hey, what's up, guys? Leo. Wow, over the last couple of days here, we are just seeing story after story that is just showing more and more crypto adoption. It's like the floodgates have just been opened, and we're seeing big companies like, let's just take a look here. If we come in, we can take a look here. Watcher put out, Justin, Morgan Stanley CEO says the bank is working with regulators to offer crypto transactions. The other day we saw Bank of America doing something similar, talking about digital payments. But what's really interesting to me, and this is what I've been talking about for a really long time here on the channel, is, well, I guess not that long, but I've been talking about it for a while. So Cointelegraph reports that Blackrock CEO Larry Fink says that he wants the SEC to approve the tokenization of bonds and stocks. Now, that is a monumentally big deal, because if we take a look at the bond market here, so the US bond market, and this is going to include all types of bonds from, treasuries, corporate bonds, the market cap there is $46 trillion. That's a huge market that they're going after, along with the US stock market being $64 trillion. So put together, that's $110 trillion worth of market cap, worth of assets that are going to be tokenized onto Ethereum, because that's their main. Now, there are other chains that they've started using, such as Aptos and Avalanche. They've been starting to explore into those other layer one blockchains, but the main one is Ethereum. And the reason being is because it is the most secure out of all of them and has the best track record. Now, if we come over here to ultrasound.money, we can see the market cap of Ethereum is right around $400 billion. And then the ERC20 tokens and the NFTs on it, the total value secured is almost about the same as the market cap. So it's got almost a 1-to-1 ratio between the market cap of Ethereum to the assets. And the reason I bring that up is because Ethereum is a proof of stake chain. So what that means is you need a certain amount of market cap in order to secure the blockchain. For example, like proof of work, the way that it functions is that it's based on computing power. If you want to attack the network, you need 51% of the computing power in order to take it over. So now, right now, Bitcoin has the most amount of computing power protecting it on the entire planet out of anything else, by far. So the way the proof of stake works is it's essentially the same thing, but it has to do with monetary value. So if BlackRock wants to tokenize the entire stock market and bond market, and I believe that's going to go far beyond that. You can't have its market cap at 400 billion, because that's just not enough to protect $100 trillion worth of assets. Now, I don't know exactly what the security ratio would need to be. The market's going to figure that out. But assuming that it would stay at a 1-to-1 ratio between, value that it's securing and and its market cap, then, even if it's 1/10 of that, you're talking about a coin that has, $100 trillion worth of value locked on it. You're talking about a $10 trillion market cap for Ethereum, which, that puts the price per token around, $83,000 per Ethereum. So, that's a huge upside, considering that right now we're sitting at 3,200. So I think this is one of the absolute best trades in the market. And going back to what the banks are talking about, because they keep talking about crypto payments, and some of them may use XRP for certain, cross-border payments. But what's interesting to me is the stablecoin market, because Ethereum dominates the stablecoin market. And so if we start seeing these banks launching their own stablecoins, because it's incredibly profitable just look at the amount of money that Tether makes on an annual basis. So if we see stablecoins start coming out built on top of Ethereum for payments with banks, that's a whole nother market. That's a whole nother avenue of assets that can be backed on top of the Ethereum network, just adding to its value. So, you're talking a 6-figure asset. And what's interesting is that we can actually see that in the charts. So if we come over here, so we can take a look here at a post that I made earlier, just to kind of illustrate a point. So in Elliott Wave Theory, you have 5 waves that go up. So you'll have a 1, 2, 3, 4, 5, and that's called an impulse wave. And so a really interesting pattern starts to form where you get a 1, 2, 1, 2 pattern, and then you're expecting the third to play out. And if we look at the overall price action on Ethereum. We're looking at, I believe this was either the weekly or the monthly chart. I think it's the monthly though. But what you'll notice is that this is a textbook pattern setup where you have a 1, 2, 1, 2. And so now we're going on the third up into, and this is where it gets really tricky, is because we've never seen mass adoption like this before with BlackRock and all these big banks. It's predominantly been retail up until this point, and now we've had an environment where the government just actively prosecutes and goes after all of these crypto companies that are coming out. But now it's more than that, because now we have traditional companies, like big companies like BlackRock, JP Morgan, Bank of America, all these big banks, traditional finance are coming out and they're saying, okay, now we're ready to play ball. Now we're ready to start investing capital and building on top of crypto. So what this looks like to me is that these cycles, everybody talks about the 4-year cycle. To me, what this looks like is we've had a series of 1-2s over the course of, the last, 10 years or so. And we're gearing up for the third wave, because in Elliott Wave Theory, the third wave is typically the most extended, and there goes this fireworks again on screen. I don't know why it does that. It's the most extended wave, goes on with the most amount of magnitude. And so if you think that from a technical standpoint, and then you think of it from a fundamental standpoint, something has to trigger that. Something has to cause all that buying. And what bigger buyer than the largest banks and companies and governments on the planet could trigger that? So from a technical standpoint on the charts, it's looking like we are in, I guess you could call it a super cycle, but I would just call it a third wave within the adoption period. And another reason I kind of think that we're going to see an accelerated crypto adoption is because for the next 4 years, there's certainty, and markets and investors love certainty within markets, meaning that for the next 4 years, they know for the first time we have a pro-crypto president that is, actively promoting it. And so I think these big companies are going to leverage that. They're going to take advantage of it to push through as much adoption as they possibly can. And the reason I think they're going to do that is because let's say that you get another administration after, like let's say they don't accelerate the adoption and we get another president that, is anti-crypto and he wants to squash it. Well, if it's not super adopted and used in everyday life, then it's much more likely they would be able to just kind of try to squash it again, like we've seen the last 4 years. But if these big companies are able to go in and really push this thing and really get it to where the average person is just using it in their daily lives, then it's going to be incredibly difficult for you. Once you have the infrastructure built out, it's hard for, a president to come in and say, no, we're just going to get rid of all this. It would be like them coming in and saying, we're getting rid of the internet. Like, you don't go backwards. Like, once you go forwards with progress, it's much more difficult to regress unless you have some sort of like a black swan event where, some sort of cataclysm type thing that happens. But once you adopt a new technology, like, people resist it at first, but once you get it adopted, then you're not going to get rid of it. It's just there. It's just part of your daily lives. Like, people aren't getting rid of their phones. Once crypto becomes adopted and they start using it, it's not going anywhere. At least that's my opinion. That's how I see it. And so moving on to apparently Cynthia Loomis, senator in, I believe it's Wyoming. She's been made the chair of the Senate Chair Subcommittee for Digital Assets. So this is also a really big win. Cynthia Loomis, she's been kind of the big proponent pushing for a Bitcoin crypto reserve. So now that she's on the Senate subcommittee and she's in a position of power that she can really start to guide where crypto goes, especially within like the Senate, because we know that the president is pro crypto, but now we have someone in the Senate that is leading, that is able to steer crypto regulations down the path that they need to go. It's just another sign of accelerated crypto adoption that I think we're going to see going on into the future. So we haven't had any updates on the Bitcoin reserve. My opinion, it feels like we're going to get other legislation first, like a SAB 121, which will allow banks to custody crypto. I think that things like that might come first before we get the Bitcoin reserve. Feels like they're kind of working out the kinks, I guess, and figuring out how they're going to exactly do it. I do know that Congress has to approve in order to fund it, if they're actually going to go out there and start buying crypto. So that's something we're just going to have to, it kind of sucks having to sit and wait, but that's ultimately what we have to do, kind of see what the market does. But until next time, y'all take care.